Yeah. Two. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale and Cliff back in the saddle again, y'all. Thank you so much for your time and welcome to another real estate edition of Real Estate Friday Training. Cliff, how you doing, big time? You doing all right, big dog?
Yeah, doing good, man. Another good week. So we back at it again, man. So
yes, we are, man. Yeah, did we get the bag? Did we get the bag, Doc?
oh yeah, always getting that back.
Yes, sir, man. We got a nice bag coming to y'all. A nice one, y'all. It's a apartment complex. Ain't it an apartment complex, Cliff?
Yeah, apartment complex, 36 unit. Man, it's in bad condition, the way we like it. You know what I mean? So it's good opportunity, man. Good opportunity.
Yeah, a good opportunity, guys, man. We want to jump in real fast, man. But guys, man, thank you so much for your time, guys. And you know, we look better than you. Let's dive into this thing. And yes, I did get the bag, y'all. A good cash flow bag. But let's jump right into it, Doc. Cliff, man, current market analysis real fast, man. What are you seeing, brother, here locally in the real estate sector from an appraisal standpoint? Tell people what's going down in the market, big dog.
Same thing. We seeing listings all time low. Not really
Yeah.
seeing anybody list their property. Um, I'm actually starting to see some buyers picking up some properties, so it's still stable, right? It's not really dropping too much. It's pretty stable. There was a drop a little while ago, but
You know?
because of the low listings, there's no inventory on the market. So right now, I'm seeing it go pretty stable. I think that's going to cross the board, and we're getting ready for a rally coming in next year. I think we're about to see something different next year. It's going to be very interesting.
Very interesting, guys. Very. And you're going to see in a second. Excuse me, what we're talking about, guys. So, guys, man, we're going to dive into this thing real quickly here, guys, concerning a question that Cliff and I asked a lot concerning real estate, because we are real estate investors. We do it at a pretty high level. The question we get asked a lot of the times is should someone or you buy a home in today's economy? Well, guys, I thought it would be wise, guys, for us to look at both sides of the coin so we can kind of sit in and reason together and answer this question: should you buy a home today? So let's just jump into our format real quickly, guys. It's going to be Brother City. This is a video of the young man talking about this here. He's talking about how builders are cutting prices and rents. Let's see what he has to say about this. Here we go.
Home builders are causing the housing crash here in Tennessee to get even worse. These townhomes were built by the builder a year ago, and they've cut the price 10%, and there's still no takers. They're just sitting vacant for sale and now for rent. This builder, because they can't sell it, they're trying to rent these 3-bed, 3-bath townhomes for $1,250 a month, which is half of what the cost would be to buy this house for a mortgage. So you gotta wonder, if you can't rent it for $1,250 a month, how could you possibly sell it for $400,000? And if you look on Zillow, this builder has a whole bunch of other overpriced townhomes for sale in the area. So don't be surprised if heading into 2024, we see more builders being forced to cut the price, especially here in Tennessee. And head to www.
So Cliff, man, what do you think about what he's talking about there, big dog? What do you think about that?
Yeah, I think in some markets you might have some overbuilding, uh, where you just didn't have enough supply. I mean, especially if they built in the past year. I
Yeah,
mean, the demand just is not there. The
it's not.
the a $400,000 house maybe at the beginning of the year was, I don't know, 15, $1,600 a month, but by the end of the year it's 2,600, three
Mm,
thousand a month.
mm, mm.
So they just got caught in probably the worst situation, to try to build, maybe in that area. Some other areas a little different.
Yeah, you're right about that. I know around the corner from my house, we have a product the biggest builder in, I believe, Texas, Grand Homes. They are them and Shattuck Homes are actually building an entire subdivision. Right? I mean, it was like 4 phases of it. They finished the first and the half of the second. The third and fourth phase, it's like nothing. It's just land sitting there. Ain't
Mm.
ain't nobody building it all. Period. And I actually saw at one of the other subdivisions that they were actually developed. I was driving as I was taking my kids to school. It was probably about maybe 50 cars around the show homes for Shattuck Homes and Grand Homes and they had sheriffs there with their lights on. And I was like, what's going on here? And I said, wait a minute, are they having a bidding process for their homes? And I'm like, what in the world was going on? It was the weirdest thing. I have never seen so many cars at the show homes of home builders. It was about 50 to 60 of them. And they had to have police there. It was crazy. I mean, there was no
Yeah.
fights at all, period. And there was no fights at all, period. I just said, man, the only time I've kind of heard about that is when a builder actually has a bidding process and you have realtors and potential home buyers show up to bid on homes. Does that sound familiar to you?
Oh man, that's crazy demand if you got that going on. I mean, but like I said, every area is different. It's real different. We already know that real estate's local, right? So you
Yes.
might have a situation where you got an area where it's just there's no inventory and a lot of buyers. Let me guess. This is not a high end area property. This is more was it first time home buyer, right?
No.
Oh,
This is
really?
high end. This is high end.
Mm,
Yeah, brother.
well, that's
High
different.
end. You're talking about price points from 700,000 and above.
Oh, yeah, that's different. That's something different.
And I had never seen it before in my life. I was like, where? Why is this happening? Why is there so many cars here? You had the sheriffs there. And I just said the only time I've seen this amount of cars there is when there was a bidding process where you had realtors show up, right, and everybody walks in, and you get a number, and the builder calls out numbers, and whoever has the numbers gets to bid on the houses.
Man.
It's crazy, bro.
Yeah.
Yeah, bro. Yeah, man. We at that level now, y'all.
Mm.
That level now. It's it's crazy. So again, we're gonna answer this question in a second. Should you buy a home? So now we actually had an argument talking about how the builders are struggling. So they're having to lower the rent rates and also lower the price point, and properties are still sitting vacant, right? We know why. But now let's go to CNBC. Here on there, they're talking about the rates. And on this video, they're talking about the rates, guys, will settle at 6.5% by mid 2024. Newsflash, this is exactly what Cliff believes is going to happen as well. Also, let's see what happens. Let's see what happens. Let's go.
Home construction ETF, ITB, is up again today after hitting an all-time high yesterday. The CEO of Toll Brothers taking a bow on behalf of all the builders for having navigated a difficult housing environment on CNBC earlier today.
This industry really should be looked at hard for a re-rating because these companies are structurally run differently. And for us to have the business we're having in the face of these rates, I'm just super proud of not just Toll Brothers, but I'm super proud of how this group is now being run, and we just deserve more respect.
Sure.
My next guest agrees. In fact, he was early to call that this would happen. He just raised his price target on several big builder stocks and is especially bullish on two of them because of their direct exposure to single-family starts.
That's what he
Let's
says.
bring in Stephen Kim. Stephen Kim, he's home builders analyst at Evercore ISI. Stephen, it's great to see you again. Welcome back.
Thanks very much for having me.
So,
All right.
by the way, just going to throw this out there. Is that a deserved bow, or are we going to look back on this as a sign of the times and go, well, the building trade was about to implode and, we all should have seen it coming and that kind of thing?
I think that this idea that the builders are going to implode is something that actually has provided the wall of worry for them to climb over the last really several years. Ever since the pandemic hit, people were wrongly thinking that the housing market was going to suffer. And then when it actually subsequently roared, people said, well, it's got to be the rates. And when the rates surged, to a level that we've really probably nobody expected, 2 years ago, people were convinced the housing stocks and the housing market in general was going to collapse. And that really hasn't happened at all. And so now we're in a very interesting phase where people are beginning to say, why not? Why have things happen the way they have? Why have the builders proven to be so resilient? People want to know. And in the investment community is very honest. They don't care about yesterday. They care about being right tomorrow. And that, I think, is setting the stage for the revaluation that Doug was referring to just now.
And a few of the investors who dipped into this space last year when the multiples were at 4 and 5 and just very low levels are now thinking, maybe I can take some profits here. Why do you think that could be too early or a mistake?
So Cliff, he was saying that the housing market was roaring. Like what he get that detail from? Is he talking about before COVID?
Well, he's talking about during COVID.
Oh, okay. During or before?
I thought he was saying during COVID. That's what it sounded like.
Because because of the fact that the housing market wasn't roaring through COVID at all. I mean, it wasn't at a standstill, but it wasn't roaring, was it?
During COVID, it was booming because they dropped interest rates so low.
Yes, because of the fact that they had to keep everything going because they were doing. Okay, that makes some sense. I'm tripping on my timelines. Y'all forgive me. I ain't Jesus, so I don't know everything. But I'm like, man. But I'm like, wait a minute. This time I ain't making sense. Let's keep going. Let's see what you're talking about. Let's keep going.
Well, there's a couple of numbers that I'd throw at you. First of all, that the small cap home builders right now are trading at 1.15 of book value. Book value is probably going to grow at least 15% this upcoming year. So effectively, they're trading at almost 1 times book value, in a year from now. That's an incredibly low valuation. It almost implies that the people think that these companies might not even be around, long term. So really, really inexpensive valuations just on a book basis. On an earnings basis, they're in the high single digits.
Well.
It's very hard to find companies that are solid companies trading at high single digit PEs. We think that the stocks are going to ultimately trade at least to the low double digits on a PE basis, and we think a further revaluation, even higher, could very well be in the offing over the next few years.
So here's my question, Cliff. Why this is stopping real quickly here? Toll Brothers actually did fairly well from a stock standpoint. They actually made a really good pivot, right? Really good pivot, which is cool. But at the exact same time, it seems to be like a lot of these analysts, their critique or their analysis is just centralized upon the stock market and the performance of the stock, not so much what's really going on Main Street. And is my assumption right or am I off?
No, the stock market does not have to have correlation to price or earnings, what they call PE.
Sure.
Right? They could be uncorrelated. That's how you can have companies like Uber that make no money.
None.
They lose money but have billion-dollar valuations.
Sure. The same thing with Facebook. Yeah, I got you. That's how Facebook raised their money. I got you. Yeah.
Right, because they're basing off a different valuation system, which in their case was customers or consumers. They're valuing it based on that, saying you could upsell them or sell them additional products.
Yeah.
That's how they're valued.
I'm rocking with you, but at the exact same time, that's great from an accounting standpoint. But from a Main Street standpoint, that didn't help the consumer at all. That type of analysis, that helps Uber and Facebook because that's based on the valuation, the PE standpoint. That's fine, but how does that analysis help the consumer when it comes to have them making a decision on should I buy a home today?
Oh, I mean, I think he's talking to the investors, right? I think that's who he's talking to. people who are involved in the business and people who want to put their money up and see if they can make more from it. But overall, the point is that he's saying is that the future looks bright. It looks
Oh yeah, it do. Yeah, it do.
the system is artificial. So I was gonna bring this up
Okay.
just real quick for you,
Talk to me.
right?
Talk to us. Talk to us.
So let me share this right quick.
Let's go on. Share. Here
See
we
my
go.
screen?
Boom. I got you. There we go.
Okay. If you remember, we talked about this a couple months ago,
We did.
right?
Okay.
Brought up Zillow. Remember it was falling.
Yeah.
Right. Okay. We've started noticing the market turning over as I
Yeah.
predicted, right?
Mhm.
So today you see it's down about 1%.
Yeah.
Point, right? Look at
Yeah.
the past 5 days,
Okay.
up 6%. And the
Mhm.
past month, 21%. It's
Yeah.
rebounding from those lows that I was telling you about.
Yeah.
Look at this. So you would have made 21% if you would have bought in 1 month, right? Now let's look at a competitor to this, right?
Okay. Let's look at
Which
it.
is
Okay.
Redfin, right?
Okay. Let's look at
Look
Redfin.
at that. Redfin's up. And by the way, when I was telling y'all to buy Redfin, and I bought, I think around 4, right?
Yeah.
We're at 8 now. So basically doubled. It's up 2.5% today, one day,
Mm-hmm.
2% for the week,
Yeah.
41% in the month.
Woo.
The market is turning. These are signs. Everybody, y'all paying attention, y'all watching this. I'm dropping some more info on y'all, getting y'all ready. I was telling y'all before, y'all could have bought Redfin at 4 when I was telling y'all.
Yep.
It's rebounding. The market is rebounding. I bet you. Let's see their all-time highs. Their all-time highs was 71. It's at 8, Dale.
Wow. Wow.
It normally traded before the pandemic at around in the 20s. It's at 8. I
Wow.
bet you it gets to a valuation of somewhere maybe 25 to 30. You have an
Okay.
opportunity to triple your money in the next 3 years, probably on Redfin.
That's reasonable. That's reasonable.
That is
From
a
information. Stock, yeah.
300%. Yep, from stock perspective, it's about to rally, getting right back up to where it was right about here. See, in 2022, beginning of the year, it was 26, trading about 26, 27. I think that's where you could see the stock go in the next, probably 24, 36 months.
Okay. Okay. Good stuff. Good stuff. Good stuff. Hope you guys are writing this down, guys, because man, this is good information. I'm not a stock guy, not because stocks are bad. It's just I like tangible stuff, and I like private equity investments. Cliff is a crypto, real estate, and a stock guy. That's fine. It's all good, baby. Ain't no thing what it is, what it is. Everybody has their taste. My thing is this here. To get back to this question here, because you did a good breakdown of what you advised from a stock standpoint before and now. Here's a question I got for you: is to answer this question, should someone in today's economy, right? Because buy a home, because what actually happens is this gentleman on MSNBC was saying that he believes that in mid 2024 rates are going to go down to 6.5%. I know that marries with what what you said it's going to do, right? Do you see it getting that far down as well? And if so, is it good to buy a house or not?
I mean, right at the peak, I think we're about 8.5%.
Okay.
We're already down sub 8 now, 7.8%, 7.7. So
Okay.
we only has to go down 100 basis points, which is 1%.
Sure.
To hit 6.5. So
sure,
I can see that. Yeah, I can definitely see 1% by that point. Depending on I think it's an election year. I think
yes,
there's going to
sir.
be pressure to make the market look better.
It sure is.
So I'm gonna put an extra 0.25% on there, say 1.25. So you could see 6.25 mortgage. You could see that in 2024, and then you're gonna see the market slowly come back. And let's not forget, it's going to consistently go down until I think they'll probably stop cutting rates when they probably hit a mortgage rate of 5.5. I've been calling that for a while. So basically 2% drop from where we are today. That's where you'll see them stop.
So do you at a 6.5, or you said 6.25%? Is that a good interest rate to purchase a home?
Yeah. I think in the market we're in today, I think it's going to bottom out about 5.5%.
How is it going to affect the market?
Oh man, the market's going to boom. I've been calling that for a while. It has no choice. That's why. That's why you see the stock market doing what it does. Remember, I told you the stock market leads the real market by 6 months.
Sure.
You just saw Zillow. You just saw Redfin. What does that mean 6 months from now?
You do. Yeah.
We get ready for a boom, and we're going to boom. We have printed too much money. We have excess money. I was listening to a billionaire the other day, and he says there is $1 trillion in money markets and money market accounts because they're earning 5%. When the economy comes back, that $1 trillion is going to flood into the stock market, flood into investments, and you're going to see the economy take off.
Okay, that makes sense. Here is my counter to that. All that is a reasonable expectation. I'm going to take my argument to the Treasury auction. Who's actually originating and buying the Treasuries?
It looks like it's a global market right now.
No one wants our currency. They want our goods and services. Who's originating and buying the bonds and T-bills?
Oh, you're talking about the Fed.
So get this, guys. This is my perspective, and I'm a more dire than Cliff, guys. What business has ever originated its own product or service and bought it back from itself and it was successful? What business?
Yeah, you can't buy your own. Yeah.
So right now, guys, what's happening with the Fed right now is this here. Is the Fed is originating T-bills as well as, right, treasuries, bonds, and buying it back itself with new debt. That's what's going on behind the scenes now, because no country wants our currency. They want our goods and services. This is my counter to lowering the rate. Yes. Will that kind of try to flush money out? Sure. That may wound the economy because of the fact that of one factor, the government will not stop printing. They can't. They cannot. They can't. Next year's budget for the administration is going to be they're 7.7. They're saying 7 trillion. No, sir. How about 10 trillion? 10 trillion. Where is that money going to go? Now, I know people are going to say it's spread out over 10 years. Great. Are they not going to be printing in the first year, second, third, fourth, fifth year? Just going to let it sit there and chill, huh? Like, where is this new excess money going? Because with that type of budget, do you understand that the interest payment on the debt alone is going to be over $1 trillion? That's more than the Department of Defense budget. That's the interest. We ain't got no money. We broke. So what I'm saying is, here is the counter. That's why I'm wanting the Fed chairman not to cut the rates. Because if he cuts the rates, what Cliff is saying will most likely happen. And
But my whole thing is, I hear what you're saying.
Okay, holla at me.
You're talking from a real economic perspective, how things should actually work. But they don't work like that. We print money.
Yes,
that
we do.
is our model. We've been there since 1976, right? We've been printing. So the idea that if there is no world where we're not printing money because we have more debt than we have cash. We're stuck.
We are stuck.
Prices have no. So in an inflationary environment, how do we solve problems? Inflation. That's how we solve we print more money.
So do you see a deflation response to that, or a more inflation response to that, or a combo?
We're going to have deflation before we have inflation. So right now we're going into deflation because you see inflation falling, right?
Yeah.
At some point, that's going to turn into deflation where they don't want. That's when they'll cut to curb that deflation into a inflation that fits their model of 2 to 3%.
And all they did, guys, to get to that whole their model is just change calculations. They bullshitting you the whole time.
Right. And what happens when you do inflation? The rich
Get richer.
That's our system. We always wonder why there's a disparity, because the system is built for rich people who own assets for asset prices to increase.
Exactly.
That is our system. That's how it works. If you save money, you lose. That's the game.
That's why when Robert Kiyosaki says savers are losers, he's meaning this.
Right.
That's why when Cliff and I say acquire assets, we're meaning because of this. The wealth gap, guys, is growing even more. There's going to be a more bigger gap. Newsflash: the millionaire will not become the new middle class. The millionaire, the thousandaire, you're not poor.
Oh yeah, yeah.
Sorry.
That's why you're gonna see costs go up. Well, I mean, it's gonna seem, middle class is gonna be like having a $6,000 a month mortgage. It's gonna seem average.
Yep.
Because there's so much money in the system. That's why we changed. The dollar stores had to change from a dollar store. We can't put dollar store.
Yeah.
Because it's $1.25 now.
It's gonna be $1.50, $2.
Yep.
It's coming. It's coming. Yeah. So should you buy a home today? It depends on if you're making enough money. Because it's gonna cost you. It's gonna cost you.
I would wait until the second half of next year.
Yes. I would wait. A good friend of mine called me yesterday or 2 days ago. We had a good discussion. He was saying, should I buy a house in Texas? I just said, man, it depends on what deal you get. I would lease with an option to purchase if you want a certain property. Creativity is going to be the key. If you don't want to lease it all, because ain't nobody going to give up their 2 to 3% interest rate for 6.5%, 7, 8%. No. Hell no.
They're going to rent that forever.
Forever. And I would too. Hell, I'd sell a financing forever. Sure would. In a second. So it's just, man, Cliff, bro, this is going to be very interesting, guys. What's going to happen in the Q1, I believe Cliff is correct. It's going to be a deflation. Yes. And it depends on what the Fed's going to do. If they cut rates, inflation is going to happen. If they don't, it's going to be a year of chaos next year.
And I think you're going to see real estate prices go up high, because what happens is when they drop the interest rate, cool, that's going to bring more buyers into, but there's no inventory. And the people who are sitting on 2 and 3% interest rates, they're not selling.
I wouldn't either.
So now you have all these buyers coming in, but you have 30, maybe 50% less sellers than you normally would, because they have low interest rates, which is going to create a limitation on supply, which forces prices to go up.
And guys, just to let you know, guys, your taxes are going to go up.
Oh, they about to, man, y'all don't even understand. Taxes, your real estate taxes, they about to go way up.
Up, y'all. I'm trying to tell y'all, stop saving. Well, let me say this the right way. Save your money responsibly, but just don't save. You're going to have to begin to make more money. You're going to have to get a side hustle. A regular 9-to-5 job, it's going to be after that plus a side hustle.
Because you got to buy
assets. You got to buy assets that produce money. Assets over and over and over and over and over again. You're going to have to, guys, because inflation is a stuffed tax, and Uncle Sam will say, I want more money.
I think they adjusted it. I got to go back and check, but for 2023, I think they adjusted the taxes because inflation is so high. The amount of money you make, they're adjusting that now.
That's correct.
So, but this is our system. This is going to go on for the next 20 weeks. We have no choice. They're going to the gold standard of Bitcoin. They ain't never gonna happen.
And guys, to be honest with you, hey guys, Don't be surprised if they begin to visit, and I don't mean to scare you, investors. The 1031 exchange, they coming for it. Don't be surprised if they go after your retirement accounts too for taxes. They coming. Oh, you thought you were exempt? No, not at all. Now, am I saying that you should stop doing 1031 exchanges? No. But if they're, again, strategy, if what Cliff is saying is correct, which he's right concerning there's not a lot of inventory on the market, right, Cliff? What's not being generated? Sales, which what pays for property taxes, which pays for sales taxes, which pays for income taxes, all capital gain taxes, on and on and on. That revenue stream is drying up for the government. They have to find other places to generate revenue, which is taxes. Hello.
Yeah, that's why do you think? Okay, they passed a bill a while back to get more IRS agents. Why?
It ain't for the millionaires and the big man, ain't for us.
Why? Let them know, Dale. Why would increasing the amount of IRS agents not increase the taxes on the rich?
Because we have CPAs, accountants, bookkeepers, tax attorneys, other attorneys, wealth strategy, wealth management on our squad. They don't want to mess with us because why? We're going to cost them a whole bunch of money. But they're going to come after the regular old Joe Blow who can't afford the squad that we got.
Exactly. They're going after the average person. They can maybe get a couple grand out of him, 10 grand out of the small business owner. They're going after small business for the most part. They trying to get nickel and dime them because the millionaire, like Dale said, they got a squad. They're gonna go to the best accountant in town and go to work.
And go to work. And you better believe they have contacts with them within the IRS, everything.
A lot of the who millionaires use are ex-IRS agents. They know the game.
Know the game, guys. And there's different types of accountants. That's another lesson. Just another lesson. You have an accountant that actually is a certified public accountant, and there's another one that is actually higher than they are. The rich have those two on their squad. You don't have any of those. I know them. They're very wise. They advise me too. And Cliff. So he's keeping it 100 with you guys. Go 100 with you guys. Get ready. It's going to be a year of chaos. Those that are ready. These type of deals are going to be coming, by the truckloads. Distress property. They're going to be coming all the time. Cliff, tell them, bro, we are about to acquire an apartment complex. Let me do the math for y'all real fast, y'all. I ain't gonna show you because it ain't none of your damn business. But I'm gonna tell you the numbers. The ARV on it is $2.6 million, right, Cliff?
I think it's about
that's what it is. You know what I'm saying? So we're buying it for I ain't gonna tell you the number. Ain't no worry about it. We're buying it for an insane price point. I'm gonna take this price point, divide it by that. We're buying it for 100%. Here we go. 6.9% of the after fair value. It's damn near zero. And Cliff, how do we find this deal?
Oh man, that's just searching and looking for good deals, man. It's following a process of just follow up, mostly just follow up. Because this deal wasn't one that was straightforward. I think this took a couple months. We've been talking about this for a couple months. We got a unique seller on our hands, so it took a little bit of negotiating, some back and forth, staying up with the listing realtor, But at the end of the day, we got it under contract. Real good deal. Amazing.
Sick deal. Sick. And then we got 2 other properties, right, Cliff?
Yep. We got a couple other single families we got. So we locked down our contractor. We're getting the contract with them going. And so we hope the goal is to try to get maybe 1 more this month. That's going to make 3.
They're out there, guys. They're out there. Got another deal in Atlanta. Cliff don't know about that one yet. Working on that one, buying it for $280, land worth $1 million. New construction, yeah. Mm-hmm. We also went. We were looking at 3 apartment complexes on the campus of Michigan State University. Those are still back on the table. Oh, those are back on the table, Cliff.
Oh man, okay.
Y'all, by the truckloads because of mismanagement, distressed properties. This is the reason why, guys. I'm gonna pivot over to. If you see the ticker at the bottom, it says free real estate master class, guys. And we're going to give you a technique for free today. Right? I was doing a live a couple days ago. I'm going to repeat what I said. Here is a technique you can use for free. Get your pen and pads out, y'all. Real simple, y'all. I ain't going to give you one of those old ones. It's going to be one of the new ones. There's a way for you to contact the city, right? And get a list of properties the cities do not want, right? Cities do not want at all. These are distressed properties. These are called code violation properties. You can get that list of those properties the city does not want or county, right? And buy those boys for free. Very simple to do. Not hard. All day long. That's just one way. We ain't gotten to skip tracing. We ain't got none of that stuff yet. Well, but tomorrow we are. Tomorrow we are. So, guys, tomorrow, guys, at 12 noon, right? Central Standard Time, Cliff and your partner, for those that don't social media, we are having a real estate masterclass, right? It's from 12 p.m. CST to 2 p.m. It's going to be a hard stop at 2. Okay? Hard stop at 2. We don't mind big or small groups. It's fine. I actually prefer smaller groups because we can kind of go a little bit more deeper into it, and they can ask a lot of questions, which is fine. We have people signed up already, which is fine. You're welcome to attend. It is free. It didn't cost you a dime at all. Cliff, this last one we did, man, was it pretty good?
Oh yeah, last one was real good, man. We had good questions. We had people participating and was able to work through a problem. So it was real good, man. It's the opportunity for you to be able to ask questions and figure out, all the things you've been trying to learn, right? I mean, you can ask it and find out for yourself in real time.
It's real easy, guys. It's real simple. You don't have to train if you don't want to, but you are getting a handout, right? But you'll get the handout for you to walk through with us right there, and also a recording of the master class afterwards, so you can re-listen to it. All this for free. We ain't charging you nothing. So if you can carve out 2 hours of your day on Saturday, get some free game from your partners. It's real simple. You want to say anything, Cliff, man, before we exit, brothers?
No, man, same thing we got every week. One deal can change your situation. We got an opportunity for you tomorrow. Hop on and see what you can do to get that one deal. And like I said, we don't do it often. So hop on and take advantage.
And if you're on Instagram, guys, just go to the link in my bio on Instagram. Mm-hmm. It's the first link right there. Go to my link in my bio. It's the first one. Click it and book your seat. That's it. And it is 100% free. It is free. Our philosophy is this here. If we can teach you guys how to locate, negotiate, and close distressed properties, we'll bring the capital and the know-how. It's that simple. Ain't hard, y'all. Cliff, do we have any of this, man? We coming up, man. We had to figure this out on our own, didn't we?
Oh, no, man. This is we learn on Hard Knocks. That's how we learn.
Yes, sir. Well, I see you, Stephen, brother. We're gonna see Stephen on the masterclass. Karima as well. My nephew CJ's gonna be there as well. There's some people that's gonna be there, and a couple of people as well, also, guys. But guys, hey, man, thank you so much for your time. God bless you, man. Cliff, man, you want to say anything before we get off, big dog?
Nah, man. Hop on. See y'all tomorrow.
Gotcha, guys. You know how we end it every time, guys. Before you leave and while you can, guys, you see that thing, man. Take that damn picture and give it to your mama and them. And say, you see me in my cream colored shirt. You see it? Now holla at your partner. Holla at you guys, man. Peace.
God give thanks. Bless God give thanks. Bless God give thanks. Bless God give thanks. Big God, big grace.